Welcome to a new update. Today we're going to talk about the fact that Bitcoin broke back above 26k. Although the sentiment was super bearish in the past few weeks, we've seen some crucial news items taking over, through which the markets are also moving back upwards. What can we expect from the Bitcoin markets in terms of continuation here? Are we correlated towards gold still, or are we correlated towards the equity markets at this point? And what can we expect in the upcoming months from the markets? We're going to have an overview on the markets, but before we continue, make sure to hit the like button, subscribe to this YouTube channel, and also make sure to join our public Discord where you can find more analysis. Every 2 weeks I'm providing a trade ID. I'm doing AMAs. My team is there to answer your chart requests, but also to provide feedback on your charts and more. And also, today we can announce that we are doing the pre-sale of the crypto course. The crypto course is live, and we're going to walk you through it and see a small snippet of the entire course. So that's for today. So we first are going to discuss the crypto course, which you can see on the screen. If you order now before June 29th, you're getting a 15% discount. This is the largest discount that we will be doing, and it's for a crypto course that is all round, as it is more than 7 hours of content about Bitcoin, about money, what is Ethereum, what can it do, and what is ETH 2.0, the entire ecosystem, including smart contract platforms, stablecoins, DAO, DeFi, NFTs, metaverse, and more. We're going to dive into security, how you can actually protect yourself. We're going to dive into starting your portfolio, how can you build it, how can we do with taxes, how to start, and what are examples of crypto portfolios and all-round portfolios. And then we're diving into TA, into the basics of TA and the basics of FA, and we finalize it with mindset and social media. All is included into the course. It's priced at 299 euros, but you will be getting a 15% discount. And here we have a slight view of what the course can. Welcome to the Ultimate Crypto 101 from Basics to Mastery course. My name is Michael van der Pop and I'm a crypto trader and market analyst with years of experience in the field and a strong following on social media. If you're new to the world of crypto and looking to get started, this is the perfect course for you. Over the course of several modules, I will take you on a journey through the basics of cryptocurrency, including Bitcoin and Ethereum, and provide you with a comprehensive understanding of how to navigate the ever-evolving crypto ecosystem. With my guidance, you will learn the fundamentals of crypto trading, including both fundamental and technical analysis techniques, as well as how to build and manage your own crypto portfolio. In the Bitcoin and Ethereum modules, you will learn everything you need to know about these two foundational cryptocurrencies, including their history, underlying technology, and current market trends. With this knowledge, you will be able to confidently navigate the crypto markets and make informed decisions about your investments. The fundamental and technical analysis modules will teach you how to read market trends and analyze price movements, giving you the tools you need to identify potential opportunities and make profitable trades. But it's not just about trading. The course also covers the broader crypto ecosystem, including the various types of blockchain technology. These are DeFi and NFTs. This comprehensive understanding of the crypto world will give you a competitive edge in the market and allow you to make informed investment decisions. Finally, I will guide you through building and managing your own crypto portfolio, providing you with valuable insights into risk management and diversification strategies. With my expert guidance, you will be able to confidently build a portfolio that aligns with your goals and risk tolerance. Don't miss out on this opportunity to jumpstart your crypto journey with me. Enroll now in my Ultimate Crypto 101 from Basics to Mastery course and start building your crypto portfolio today. So that is about the course. As I mentioned, there is a 15% discount that you can use if you want to order the course until June 29th. I'm very proud that we are finally live with it, as it has been some serious work in progress. It took a lot of time and effort from multiple people, from the entire team, from the editors, but we are here and we're going to provide you all the insights that you need to start building your portfolio, to be educated when it comes to crypto. And this is the first course, so make sure to check it in the description. It's a lot of promo, but now we're diving into the markets which are doing well. So first, what is essential here for the markets is that the sentiment, I saw some tweets earlier that the sentiment was comparable to the period that we witnessed in 2019-2020, which was here. No real interest into altcoins at this point, no real interest into Bitcoin, but that's the difference between smart money and retail money. Smart money is usually interested when nobody is. Retail money is interested when everybody is, and that is usually how the crypto cycles are going to develop itself. In that case, what we can see with the markets is that we're currently in the same stage as in the previous cycle. So we have to compare that with 2019 and we have to compare that with 2015, as right now we are approximately 10 months before the Bitcoin halving. Here in May 2020, we had the halving taking place. So you have to go back towards the summer, which was here. Bitcoin was acting around 14K, 11K, had the Libra run and went from 3K to 12K and then consolidated, and altcoins didn't really move up anymore. After that, we started to correct a little bit too much as we had the COVID-19 crash. But also in the case of 2015, 2016, we were having the halving in July 2016, and 10 months prior, which is October, around here, we started to make the first real run-up. So there are two differences here. And I think if you want to compare the market cycle, I think going back into the 2015 cycle makes the most sense. Now, the big event that took place last week was the fact that BlackRock is announcing that they will file for a spot Bitcoin ETF. I saw some things on social media that we don't need one, etc., etc. But if we clearly want to continue having a cycle that we expand the overall size of the crypto market cap, you need institutional investors to get them into the markets. Why? Because that's where the money actually is. Retail money isn't going to move the markets anymore. Institutional investors are, but they don't have the ability to actually get into the market. So they require an instrument that is liquid and easy to liquidate, and also that is compliant with the regulatory framework. So we've seen the cases of Binance and Coinbase being sued by the SEC, which is also a very important topic. But when we look at the real framework and the real importance, the BlackRock spot ETF is the one. Imagine you've got $1 billion of USD that you want to apply or that you want to deploy into the Bitcoin markets. You're not going to buy Bitcoin through a cryptalized or crypto exchange. You want to have an asset or an instrument that you can use to actually liquidate fast and smooth, as there is enough liquidity in the markets. And that's where CFDs and ETFs come in. So through that ETF, you can get exposure towards Bitcoin, but don't actually hold the underlying asset, and that's where the law makes the difference. Why is this important? Well, if the BlackRock ETF gets applied or gets accepted, which is most like 99.9% of the case with BlackRock, it's getting there, which means that within a year from now, we're going to get an ETF. It is opening up the markets in the US for the institutional investors to deploy some money into Bitcoin. And you don't require billions and billions of dollars to make the markets move. It is just a small occasion that they need. Why this is important is that a spot ETF requires collateral. So for instance, if someone wants to buy for $1 billion in Bitcoin ETF, in the Bitcoin ETF, BlackRock requires a certain amount of collateral to be into Bitcoin. So they have to buy spot Bitcoin, and then the ETF through institutional investors can be used or can be bought, which means that in the phase going into the ETF, you'll probably see prices go up as BlackRock is pushing it up even more. Additionally, what we also will see, Fidelity, there's rumors around Fidelity going for a spot ETF, so probably we will be seeing more of these news items come along, which means that going into the market cycle where we are right now, I think 10 months prior to the halving, we might have finished the correction of Bitcoin and going into the next wave towards 38 to 42K. If we get an expansion of this cycle, we can definitely say that there is a case of a continuation towards the next level, which is 1.618, which is around 40k. Probably getting a similar case as what we have experienced in 2015, 2016. Breaking out of the bear market, having 1-2 phases, sideways action, and then another phase to the upside, which looks a little bit like with the current pattern in which we have been seeing this upward structure, are going to get some consolidation and then targeting the high, starting breaking out, consolidate again, maybe one more high, and then we consolidate again going into the halving. That is the most likely case right now, and I understand that there is a macroeconomic phase where we're most likely going to have a recession, etc. But we don't have to see Bitcoin start to underperform when there's a recession, as currently Bitcoin and gold are heavily correlated at this point, through which you can actually expect gold and Bitcoin to continue pacing up if there is going to be a recession. When we're looking at gold at this point, and I need to remove this, we can see that it's consolidating around the all-time high, which is relatively comparable to the period that we witnessed in 2008 to 2010, but also in the period of 2006 to 2007. Multiple tests of the range high, through which we are most likely going to have a breakout at some point. The question is, how far will this correction last for gold, through which breaking these highs are going to push the prices up for gold, but most likely also for Bitcoin as they trend together. Right now we can see that equities have been continuing upwards, especially tech has been running, but gold has been consolidating, and it's an ultimate question. We are currently acting into this range construction. We've just witnessed the deviation on the lows, through which it is very likely that we're going to break the highs as well as we have been testing it here. If we get there, we're most likely going to break to the upside. How? Through data or through news that we need to get from the markets that are going to be bad, through which there is a most likely case of a recession, and that's when Bitcoin and gold start to pace up. When we're looking at the total market cap for Bitcoin and crypto, we are currently consolidating beneath the 200-week MA and the 200-week EMA. So we are on to a few important levels which we must watch, and that is also the case for the Bitcoin market at this point. Currently we are acting beneath, and you can see that there has been some tests, but we clearly cannot break through it. The moment that we will break through it, we probably are going to have a significant expansion of the price action of the total market cap. So we are fighting it, which means that we've also been retesting some crucial levels, and breaking and flipping that area is going to continue pacing upwards. The altcoin market cap, as we can see, very comparable to 2019. We are currently still running the downwards here, having a significant correction. This is going to reverse, but most likely Bitcoin pairs need some time before they start pacing up. That's what we're going to discuss in the update from Saturday. Also, when you're talking about this, you can see that the others chart is currently getting into the depressing phase, or the depression phase, which is very much comparable to the Wyckoff cheat sheet and towards the entire market structure, that in this period of time almost nobody is interested into altcoins and crypto. Well, this is actually the period where you should start to get interested into it. Now, when we're looking at Bitcoin for the higher time frames I just mentioned, total market cap is currently showing a case where we are going to at least try to break back above. But when we're looking at the market for Bitcoin, we can see that we are fighting the 200 MA, and we might be breaking back above it. But most importantly, we have been holding above the EMA 200 here, and we have been holding above the previous resistance, which also was resistance in August 2022 and has been resistance in February 2023. Through that, as we have been seeing this significant bounce up here, the chances are highly, well, let's say stable, that we're going to have a continuation to the upside, most likely not a push, especially if we break this high at 31k. There's a gap from 31k towards 38k, but most likely we run towards anything between 43 to 44 as we usually wick to the upside. I expect to see more news coming in from institutional investors in the US and etc., through which accumulating in this area, especially with the negative sentiment also on altcoins, is the right way moving forward. What we're looking at in terms of lower time frames is essentially what we're seeing here. We have been taking a few highs in terms of the volatility here, so I'll just erase this for a little bit. We have been taking this high. We are not taking any lows yet, but we are having some more highs taking place here, through which that if we crack 27.4, that is the crucial area, 27.2 to 27.5. If that breaks, we most likely expand towards the upper highs of the area and 30k. So I assume that we're going to have some corrections taking place, most likely take the liquidity beneath the lows here and get towards 26.1 at some point. But we are going to continue pushing. So my crucial area to hold is this area around 26k. If that sustains, that is the area where you can start looking for long investments. And if we take the liquidity above the high of 27.4, you get the scalp zones for shorts. But ultimately, I think that the crucial level for Bitcoin is 27.4. And I think that you want to accumulate your positions, and we expect to see a breakout to the upside. That's the update for today. I'll be back on Thursday with a second update on the markets. Make sure to subscribe and have a wonderful day. Ciao.